It's clearing out a bit now. Good. Dear friends, ladies and gentlemen, members of the media, very good afternoon to all of you. And it's my pleasure to welcome you to our first post-MPC press conference for this year, the year 2022. As you're very much aware, this year started with a brighter outlook for our economy, as the effects of the pandemic were gradually receding and key sectors of the economy were regaining dynamism. But the war between Russia and Ukraine is a new challenge that we all have to cope with. This conflict brings new risk to global growth as well as pressures on global inflation. The MPC deliberated extensively today on the potential implications of the war for our economy. I shall provide you with an overview of the international and domestic economic developments which are having a bearing on inflation and growth outlook for this year. The MPC has considered these elements to reach to its decision on the monetary policy stance today. Let me begin with international economic developments. Before the war between Russia and Ukraine unfolded, global recovery was already well underway. Countries were grappling with the pandemic, with good progress made in the rollout of vaccination programs globally, which helped support the positive momentum in economic activities. The war between Russia and Ukraine has now added layers of uncertainty to the global growth outlook. Although official figures are yet to be released, some high-frequency indicators are already pointing towards slower recovery as at the start of 2022 based on the ongoing geopolitical tensions. Higher prices and shortages of inputs are also constraining global economic recovery. The IMF, in its January 2022 World Economic Outlook update, estimated global economic growth at 4.4% for this year, a downgrade of 0.5 percentage points from its October 2021 projections, mainly on grounds of the withdrawal of accommodative monetary policy stances in many parts of the world and supply bottlenecks. However, these growth forecasts by the IMF do not factor in the latest geopolitical developments in Russia and Ukraine, and as such may be subject to further downward revisions. In its statement on the economic impact of war in Ukraine, released on the 5th of March 2022, the IMF has already indicated that the ongoing war and associated sanctions will also have severe impact on the global economy. With the new layers of uncertainty that the Russia-Ukraine war may pose to global recovery, the balance of risk to growth now appears to weigh relatively more on the downside, while global inflation risks appear to be more entrenched. The path of the global economic recovery will also be dependent on the evolution of the pandemic. While improved health systems and vaccination programs have enhanced various countries' capacity and preparedness in effectively tackling the challenges of the pandemic, the risk of further mutations of the virus prevails and may affect the pace of economic recovery further. The near-term consequences of the Russia-Ukraine war are inevitably higher commodity and energy prices. The price of Brent crude reached an intraday high of $139.13 US per barrel on 7th of March, its highest since 2008, before settling down to $129.5 US per barrel as at the close of business yesterday. The price of gas is also expected to rise markedly due to the ongoing conflict. Food prices, as measured by the FAO Food Price Index, rose by around 5% in February this year, compared to December 2021. Shipping costs continue to remain elevated also. In its January 2022 World Economic Outlook update, the IMF had revised upward its inflation projections for both advanced economies and emerging market and developing economies. Inflation is expected to reach 3.9% in advanced economies and 5.9% in emerging markets and the developing economies this year, up by 1.6 percentage points and 1 percentage point respectively from the October 2021 forecast. These inflation numbers will likely be higher after considering the impact of the war on commodity and energy prices. Inflation in several countries are at high levels already, such as 7.8% in the US, 5.4% in the UK, 5.1% in the euro area, and 5.8% in India. The Russia-Ukraine war is impacting on global financial markets as well. Equity markets have plunged over recent days. The VIX index, a measure of volatility in stock markets, has risen to a one-year high. A rush towards safe haven assets has also been noted over the past weeks. For instance, the price of gold reached an all-time high of $2,070 per ounce on 8th of March. Prior to the war, many central banks have been tightening their monetary policy stance so as to stem inflationary pressures, which were expected to persist into 2022. These central banks include the Bank of England and the South African Reserve Bank, amongst others. With the onset of the Russia-Ukraine war at the end of February 2022, some central banks may be inclined to adopt a more cautious stance in their approach towards policy hikes, with growing uncertainty to the growth outlook. Other central banks may continue focusing on containing inflationary pressures by pursuing the tightening of monetary policy. Several central banks have started or continue to hike interest rates even after the conflict began. The domestic economy remains on its recovery path. Policy support, coupled with the vaccination program of doses, continue to strengthen business and consumer confidence and to sustain aggregate demand. The full reopening of national borders in October 2021 and the deployment of comprehensive health protocols to safety welcome around 262,000 tourists since the full reopening of its borders up till the end of February this year. In February alone, around 53,000 tourists visited Mauritius, in line with what was targeted by the authorities. In the last quarter of 2021 has gone up by around 40%, compared to the pre-pandemic level. In addition, the average length of stay has increased to around 12 nights from 10 nights during. Recently, the full reopening of travel between Reunion Island and Mauritius is expected to contribute positively to the tourism industry. I want to underline that tourism remains a key pillar of our economy, and it is thus closely linked with its overall performance. It is therefore crucial to deploy additional efforts to ensure the good performance of the tourism sector. Technology are expected to gain further traction this year and continue to contribute positively to growth. The external sector is expected to improve further this year, with the current account deficit to GDP ratio projected to decline to around 12% in 2022, estimate of 13.8% in 2021. In terms of inflation, domestic inflation gathered momentum in January and February this year due to upward price pressures stemming from fuel prices and food products. Focuses on the headline inflation. The year-on-year inflation is more volatile and as such may not be a reliable indicator to sustain price pressures in the economy for the formulation of monetary policy. Inflation in Mauritius continues to be influenced by supply-side disturbances emanating mostly from external sources, notably higher freight costs and rising prices of energy and of commodities. In line with global inflation developments, inflationary pressures in Mauritius in the short to medium term will continue to be impacted by the ongoing Russia-Ukraine war, global supply chain disruptions, and ongoing concerns over the Omicron variant. Domestic factors may also contribute to inflation. I will elaborate more on inflation outlook for Mauritius when I wrap up on the MPC discussion today. Let me now move to an update on financial market developments. The bank has been managing excess rupee liquidity situation in line with its monetary policy stance and to ensure that short-term yields remain within the interest rate corridor. The bank remains committed to pursue active liquidity management to ensure appropriate liquidity conditions as economic recovery gathers momentum. Since the last MPC in December 2021 to date, the bank has issued securities aggregating 45 billion rupees. Since the beginning of 2022, the bank has issued a total of 29 billion rupees of securities. The level of excess liquidity was at 28.5 billion rupees on 8th of March this year, that is, yesterday. Following active open market operations conducted by the bank since January 2022, outstanding Bank of Mauritius securities attained an all-time high of 129.5 billion rupees as at the 4th of March 2022. Conditions on the FX market have been improving. The bank has continued to conduct FX interventions to ensure adequate supply of FX on the market and to contain any excessive exchange rate volatility. Since the start of 2022, it has noted that banks have been frequently purchasing more FX from the market than what they have been selling. Consequently, the bank has been intervening at a much lower frequency, and the aggregate amount of FX sold has also gone down significantly. The bank has sold a total of $45 million to banks and a total amount of $80.5 million to the State Trading Corporation. Since the beginning of the pandemic in March 2020, the bank has sold an aggregate of $2.8 billion to the market. The gross official FX reserves of the country remained at comfortable levels, standing at around $7.8 billion as at the end of February 2022, representing around 20 months of import. The reserves have remained at a level that satisfies various stringent international adequacy assessment metrics, indicating that the current level of reserves is still adequate to shield the economy against external vulnerabilities. The bank remains committed to maintaining a floating exchange rate regime. The exchange rate will continue to reflect movements of major currencies in international markets as well as domestic market conditions. I will now brief you on financial stability with specific focus on the banking sector. The banking sector continues to remain sound and stable with strong capital and liquidity buffers. The aggregate capital adequacy ratio and the liquidity coverage ratio were at 19.5% and 247.7% respectively, as at the end of December 2021, well above the minimum regulatory limits. The LCR, the liquidity coverage ratio, in FX, was around 177.1%, representing a buffer against external vulnerabilities. Banks' robust buffers continue to sustain credit flows to the economy. The annual growth of bank credit to the private sector remained in positive territory at 0.6% as at the end of January this year, compared to 4.2% as at the end of September last year. Bank credit to the corporate sector registered an annual contraction of 3.8% as at the end of January 2022, mainly due to a 10.5% drop in credit denominated in foreign currency, while credit in terms of rupees remained sustained. The growth of bank credit to households reached a high of 8.3% in January this year, from 6.3% in September last year. The bank is continuously engaging with bankers through the 2 task forces it has established in 2020 to encourage them to extend further credit facilities to the corporate sector, especially in growth-enhancing and future-oriented sectors such as renewable energy. The asset quality of banks remains sound, though there has been a rise in the ratio of non-performing loans to total loans to 4.9% in December 2021 from 4.5% in September 2021, mainly due to an increase in impaired credit in the global business sector. This ratio is still below the 5% recorded in March 2021. The extension of moratoria and some of the COVID-19 relief measures up to June 2022 have continued to alleviate the financial burden of heavily impacted borrowers by the pandemic. The total outstanding amount of loans to economic operators, SMEs, households, and individuals which have been granted moratorium due to COVID-19 declined to stand at around 29 billion rupees as at the end of December 2021, from 34 billion rupees as at the end of September 2021. The decline in the outstanding value of moratoria is a positive indication that the economic recovery is well underway. A further sign of recovery is the drop in the amount of restructured loans since December 2020. Businesses and households are in a better position to service their debts, reducing risk to financial stability. The banking sector remained resilient despite the real economic shocks caused by the pandemic. The results of the latest stress test exercise, based on December 2021 data, indicate that the banking sector maintains adequate buffers to absorb plausible macroeconomic shocks. The financial stability implications of the ongoing Russia-Ukraine war are also being closely monitored. I wish to highlight here that the bank conducted a survey with all banks to assess their exposures to Russia and Ukraine. The results show that the direct exposure of the banking sector to these economies is not significant. I will now elaborate on the decision of the Monetary Policy Committee held today. The MPC reviewed the latest developments taking place in the global economic landscape and assessed their potential impact on the domestic front. While the Russian-Ukraine war may affect cross-border trade and investment flows across countries, its impact on Mauritius will depend on the duration of the conflict and its effects on our main trading partners. The elevated level of uncertainty around the outlook for global growth and the implications of the war on tourism compelled bank staff to evaluate various economic growth scenarios for our country. Bank staff has projected growth to be between 7 to 8% this year, that is for 2022, depending on the number of tourist arrivals as well as on the performance of the export sector. The MPC also noted that the war poses downside risk to the various growth scenarios. The relative openness of the Mauritian economy and the fact that Mauritius imports a large proportion of what it consumes mean that domestic price developments are affected by international events. As such, pandemic-related disturbances and the Russia-Ukraine war may result in higher freight costs and higher prices of energy, food, and commodities. Global financial market developments, especially in currency markets, may result in higher volatility as well. In addition to these external factors, domestic disturbances, such as seasonal factors in influencing prices of fresh food items, may weigh on inflation dynamics. The second round impact of latest price increases, especially the recent hikes in retail petroleum prices, could sustain inflationary pressures during the year. Taking all potential factors into consideration, bank staff estimate headline inflation at about 6.7% for this year, 6.7% for 2022, which is well above past trends in inflation. At today's meeting, the MPC has carefully assessed those international and domestic developments that are currently impacting and are likely to affect the growth and inflation outlook for 2022. The MPC weighed the downside risk to the domestic growth prospect and the upside risk to the inflation outlook over the short to medium term. The MPC acknowledged that monetary policy should continue to support economic recovery, but at the same time, it should respond to growing inflationary pressures. The MPC agreed that the accommodative monetary policy stance should gradually and carefully be removed in order to continue to promote macroeconomic conditions conducive to sustained growth. In particular, members were of the view that the risk to the inflation outlook called for a gradual normalization of monetary policy to foster price stability and anchor inflation expectations over the medium term without slowing down economic recovery. In the light of today's discussion, and in the face of heightened risk to inflation while continuing to promote conducive macroeconomic conditions for economic recovery, the MPC has today unanimously decided to raise the key repo rate by 15 basis points, 15 basis points to 2% per annum. The MPC has been and will remain cautious in its approach towards the normalization of monetary policy. The timing and pace of the withdrawal of the accommodative monetary policy stance would depend on the assessment of the inflation and growth outlook over the policy horizon, given the high degree of uncertainty caused by the Russia-Ukraine war and the pandemic, which is still disrupting global supply chains. The next meeting of the MPC is scheduled in June this year. The MPC will continue to monitor the economic situation very closely and therefore stands ready to meet before June if the need arises and depending on the evolution of the situation. As usual, I would like to reiterate the commitment of the Bank of Mauritius to deliver on its mandate of maintaining price stability, promoting orderly and balanced economic development, whilst ensuring the stability and soundness of the financial system in Mauritius. I thank you for your attention.
Given the downside uncertainty, don't you think 7% growth estimate is not always optimistic? Given the forecast made by the minister, which is 6.5%, I mean, it's not criticized.
It all depends on scenarios, and I would say that it is heavily linked with the performance of the tourism sector. Okay, as I said, we are in an era of high uncertainty. And the bank staff have worked on various scenarios. And that's why we're saying that, depending on the performance of the tourism industry, 7.8 as at now seems plausible. Okay?
Don't you think that, listen to you when you talk about the implication of Russia in our financial center, you seem to say that will not be the services and financial services center will not be affected by the war.
No. What I said is that there will not be any direct impact. Okay? But certainly we are at a point in time where we are very closely monitoring all evolution on that front also. I can tell you that, at the level of the bank, we are in contact with the banks on a daily basis to ensure that we are getting most relevant information on that front. At the same time, at the level of what is known to be the core group, of which I'm one of the co-chairs, we are also ensuring that at all levels of institutions which are concerned directly, we are monitoring the situation and closely following up on all evolution. But I can tell you that depending on the survey, based on the survey that has been conducted at the level of the bank with commercial banks as at now, there is very limited exposure, both in terms of deposits as well as in terms of credit, okay, given to Russia directly. So that's why I say direct, okay.
Est-ce que vous êtes du même avis des économistes qui disent que l'inflation va être à un taux à 2 chiffres?
We are monitoring it. I must tell you, look, 6.7% headline for this year is already well above what we were initially expecting. Okay, so we are monitoring. Everything will depend. We are highly in an uncertain world right now. So everything will depend. But certainly, rest assured that at the level of the bank, we are very closely monitoring it. At the level of the MPC also, we are very closely monitoring it. And if we need, as I said, to meet before, depending on how things are evolving, we will certainly meet before.
According to we're talking about
sorry.
the war.
Okay. That's fine. You can go on, please.
Yeah, about the war again and the bans from the EU, from the US to Russia, and the fact that China and Russia are going to trying to make the new links between them. And do you think that can disrupt the international economy?
Look, a war is a war. It has already created the impact that we are all seeing. Certainly, these are things that we are, again, as I tell you, we're closely monitoring. And it's evolving on a daily basis. New things, geopolitics are involved also into this. So what we are doing, we are monitoring it. We're monitoring it, and we will take any appropriate action and decision in due course, certainly, depending on all evolutions. But I must also highlight here that at the level of Mauritius, normally we do observe, as a financial center, we do observe the UN sanction list. So this is the main guiding sanction list for us as a financial center.
Governor, the rates have been increased by 15 years after almost 11 years. So should we consider
11 months.
11 years.
Yes. Yeah.
Should we consider it as a symbolic increase to signal the market that the central bank has changed its stance?
Look, it is definitely a review of our stance from a purely accommodative stance, which we had embarked on in 2020, basically in the middle of the crisis. Certainly, we are very concerned about inflationary pressures building in the country, and this is definitely what explains our decision of today of hiking the rates by 15 basis points.
You think that will contain a little bit the inflation?
Well, we will continue to watch how inflation behaves. definitely. But I think we've already signaled to the market that we are very concerned about it, and we will take appropriate actions. And as I say, we remain ready to meet if we need to meet before our planned and scheduled meetings also.
According to the banking banks, actually.
According to the
banking banks for SWIFT and all that with Russia, is it not the wrong signal sent to the banking sector at large?
Look, again, these are decisions that are being taken at an international level. For us, whatever is a risk to global, financial system has to be taken on board, and whatever decision has been taken in the light of happenings at international level. So certainly, it is what it is. In terms of what decision they have taken.
With your permission, I'll just have briefed the members of the media that unfortunately we have to shorten this meeting today. Ladies and gentlemen, what I would request is that if you have any other question you'd like to send to the government or to the bank itself, please do so just after the meeting. I'll take all the questions and will respond to you as usual as soon as we can. I'm
actually joining a conference right now on the very topic of the ongoing war between Russia and the UK. It's a conference being coordinated by the UN Economic Commission for Africa and the IMF. So I'm joining that very topic. It is certainly a topic that preoccupies all of us, and that's why we are all following up on the matter. It's the conference I'm joining in is a central bank governors conference and a finance ministers conference. Okay, thank you.